Welcome to Dreamers to Leaders, Keeping It Real with Melody podcast. Melody is a born dreamer who started from being a flight attendant and worked her way up into now a tech fashion trendsetter, thought leader, and seasoned entrepreneur in multiple successful ventures. This podcast is for the awakened dreamer. Industry icons will share their humble beginnings up to the leaders they are today. Let's all learn and be inspired. Together, we can all prosper.
Hello and welcome to the Dreamers to Leaders podcast. It's the podcast for the dreamers, but more importantly, the doers. I'm your host, Melody. If you're interested to learn more about the real estate market here in the US, this is the episode for you. We have a mix of panelists. One is a commercial real estate specialist. Her name is Stacy Vierheilig-Fraser. She's actually the principal for Lee and Associates, which is a real estate company in northern Los Angeles and Ventura area. And we also have Agnes Ma, who is a residential property real estate specialist. She also has a master's in Australian Graduate Business School of Management. So ladies and gentlemen, please help me welcome Stacy and Agnes. Hello, guys. Thank you for joining me here today.
Hi. Thank you. Hi. Thank you so much, Melody.
So let's start. It goes without saying that with COVID-19, it has really altered a lot, from every conceivable industry. How did that affect the real estate market? Let's start with you, Stacy.
Well, leasing came to a grinding halt for the most part, particularly in retail. And sales have actually been pretty good, mostly driven by the fact that interest rates have remained fairly low, although they've been creeping up in the last couple weeks. And because the SBAA, which is what most people buy through, which is where they can put down anywhere from 10 to 20%, owner user have to occupy 51% of the space, waived 6 months of the payments last year. And now starting February 1st, a couple days, they're also going to start that up again. We get 6 months waived payments, and I believe they're waiving some of the points as well. So it's a big savings. The waiving of the payment every month is, I think it's a maximum $9,000. So that's $54,000 plus the points could be, another 10, 15,000. So potentially you save $70,000. And also a lot of people don't want to be in high rises anymore. They want to be in smaller buildings where they can open the doors, open the windows. They're not sharing elevators with other people. They're not sharing restrooms. So it's really driven a demand for people to buy right now.
How about in your industry or in the single family home market? How did that affect your selling, the buying and the selling process?
Okay, so for the residential properties, contrary to what the public expected in the beginning of the pandemic, sometime March last year, real estate market was even for the residential was robust amidst the coronavirus in 2020. Per the National Association of Realtors, there were more buyers. Buyers competed intensely for fewer homes. There was not much inventory, but buyers were ferociously and fiercely competing, and the requirements are also different or more. People would want swimming pools. People would want extra room or 2 rooms to be used as office or classrooms for their children. And they also wanted already upgraded properties or updated properties. They didn't want to go through the hassle of upgrading it themselves because they didn't want people going in and out, the contractors, for the fear of coronavirus.
Yes, so with crisis comes opportunity, especially in the residential market. What would be your tips, maybe Agnes, for those that are wanting to look into purchasing their first home, or for buying a new home, or maybe even relocating?
That's a good question. First and foremost, my tip is for them to contact the realtor, a trusted realtor, and or a lender, so they know their budget. because there's nothing beats disappointment when you try to look for homes,
Mhm.
even virtually, and then realize, oh, that's not what I can afford. Does it make sense?
Yes. How
Mhm.
about you, Stacy? Any tips for those who, especially now with some of the stimulus packages and other incentives out there that you've also mentioned? Some people now have extra cash, right?
Yeah.
What would be your tips for those that want to look into investing in commercial properties?
Well, for the owner user, for sure, to get pre-qualified by the lender and be ready to go, because there is competition now on property. Even though we are seeing more properties come on the market, that there was very, very little inventory before. So we are seeing more. And the only thing I can equate that to is, well, there's two things. I think some people are leaving California. So they just, I have clients who want to leave the state and they're going to 1031 exchange and trade out of the state. And secondly, people are worried about capital gains with the new president in. People are concerned that that's going to be ratcheted up and they want to get out now before they get hit. Plus, I think California was talking about increasing some tax on sales as well. So that may be coming up, and next thing you know, you're paying 40-50% of your gains in taxes. So you have to be ready to buy something that's a good product, that's priced well. So you want to get pre-qualified, and it's pretty easy to do. You want a good lender that knows the system very well and knows how to get it through. I have heard that the SBA is very backed up because of the demand. So, we used to say you could have 30 days for a loan contingency. Sometimes it was 45. Now I'm hearing 45 might not even be enough to get it through.
Mhm. So
So
SBA, for those who are not familiar with the acronym, it stands for Small Business Administration, and they have been really a big proponent, a big player in rolling out, some of the programs, the incentive programs for this crisis, right?
yeah. And I would say the majority of my clients do get SBA. You can get a conventional loan. The difference between the two basically is the SBA loan is typically a 25-year loan, where a conventional loan is a 10-year loan. The fees on the SBA are usually higher than the conventional, but you have to refinance in 10 years on the conventional, so you end up paying the same thing. And now with the SBA waiving part of the points or all of the points, it makes it a no-brainer to get an SBA loan. I think you have to have been in business for 2 years, and most people qualify. I've had very few people have a problem with qualifying for the SBA loan. So
Very interesting. Now, still on the topic of investing, looking at the United States, the whole United States, is there a specific spot that you think you have seen like an upward trend of having more return in their investment? Is there a particular pocket in the whole United States that you think have been a little bit more profitable for those that have maybe invested in those properties?
I would say apartments.
Apartments anywhere in the US, or
Yeah.
because at one point there was Florida. Is there anything in particular that you have seen? How about you, Agnes? Any particular state that you have heard that would be good for any investor to maybe take a closer look at?
Okay, so based on history, which was last year, CoreLogics, which is like the research arm that we use as realtors, they said there was a year-over-year equity gains on three states, which was over 30,000. Number one was Washington, which had a 36,000 equity gain. And number two, of course, is California, which had the 34,000 year-over-year equity gain. And number three is Massachusetts, which had the 31,000 average, I'm talking average, year-over-year equity gain. So you may ask me why this. I could only say maybe their location. Those three states are coastal. And I'm not sure about tax, because I know Washington does not have personal income tax.
Well, good point. So, with regards to those who want to learn more about the real
Mhm,
estate,
mhm.
maybe get into the real estate as a career, or just really have a good grip on how it is to invest in real estate. Is there a particular website or apps or books that you could recommend to our listener,
Mhm.
Stacy?
Most of my investing that I've done has been just through relationships with different clients, or broker friends that I have that know and hear about deals. So I'm a firm believer in being really, really diversified. So I don't put a ton of money in any of my investments, and I'm spread out all over the United States, because you just never know when an economy is going to turn in some area. Like, back in I think it was the 80s or so, when Texas had the nosedive, and their values went down like crazy because of oil and stuff. So you just don't know. So
Mm.
I like to be very, very diversified and be in different products. I've invested in almond farms. I've invested in hotels. I've invested in car washes, senior
Aha.
housing, schools,
Mhm.
you name it. I'm just all over the place.
Talk
So
about diversification, Stacy. That's
right.
awesome.
Yeah,
As they say, never put your eggs in one basket. But
exactly.
that is pretty widespread in different industry. So, for
Yeah.
those that kind of want to learn more about the real estate market, is there a particular book that really has resonated with you that you felt provided a lot of value? Is there a book or maybe a website or a link? How about you, Agnes? Is there anything that kind of stands out for you?
For links, buyers and sellers right now are very smart, especially when they have time now to look at the different websites. When I meet with my clients, I give my clients access to my own website. And then, so because what happens, Melody, is there are a lot of branded websites there. However, they are not real time. Sometimes they text me or call me, "Uy, Agnes, can you have a look at this property? What do you think? When can we see it?" And of course, they spend time on it. I spend time on it. And next thing you know, I couldn't find it. It's because in my own website, I couldn't find it. It's because it was already pending. It's already under
Ah,
contract. They've already accepted an offer, or it may have been closed already. So what I'm saying is you have to make sure you have a reliable website for status purposes.
mhm.
Active, pending, under contract, sold. And then aside from that, I also rely on century21.com, where my so of course my broker, and realtor.com and maybe homes.com are all they may, you know
Yeah, so I
buyers and
think
sellers may look at that.
what really has been popular for years are, the Zillows.com, Redfin, LoopNet. But what you're saying is, yes, it's good to look at them, but sometimes before you know it, you fall in love with a place and it's already sold because they don't update it to the degree, right?
That's right. That's right.
Uh-huh.
Mhm.
Now, let's talk about some common myths that are there and people, the general public, think are kind of true, but it's actually a complete fallacy. Any myths that you guys want to take a jab at and debunk
Mhm.
for our
Mhm.
audience? Uh, Stacy, is there anything that comes to mind?
I mean, the biggest thing that I deal with is, that becomes an issue for people, is dual agency, and it's become hot in the forefront of the government and how we disclose and stuff. And I've had a lot of clients express like a real big concern about dual agency, and I've done a lot of dual agency. And I think if you have a good broker that knows the market, that is fair, they're going to give you their opinion as opposed to be biased to somebody. And I find that, most of the time it ends up being fine and everybody's happy, as long as you have good integrity and you're telling people the truth. And if you're active enough in the market, where a deal's supposed to be made, or what's fair or what's right,
Mhm.
as opposed to, oh, you could never look out for my interest. I hear that all the time. Oh, I'm not sure you could you could represent me. I got to bring somebody else in to look out for me. And we do owe an ethical duty to both parties as well. You know, that's the law.
I like that. That's a very good point. Yeah, that's very much kind of the pulse of a lot of people. That perception that if you have one buyer agent, one seller market, that they would have the better of better experience. But what you're saying is not really, not to the degree, right?
Right, exactly.
How about you, Agnes? Any myths that you just wanna, like, every time you hear it, it's just like, no, guys, it's, what is that?
Correct. So there will be one for buyers, there will be one for sellers. For buyers, a lot of them, or some of them, think they need to have a 20% down. And of course, with the property prices now, assuming it's $500,000 or 500,000, 20% is 100,000, right? So some families now don't have 20% or 100,000. So I just wanted to debunk that with 20%, or with buying a property, the down payment can be as little as zero if you have served, if you were heroes, served the country through Veterans Affairs loans or VA loans. And you also have 3.5% down payment. We call them FHA loans, and other government initiatives or lender programs which are available there, which the common buyer may not be aware of. Again, it will boil down to one who wants to buy or one who wants to sell to touch base with their trusted realtor and lender.
Good point.
Can I ask a question that kind of piggybacks to this? It's actually for Agnes. I can't remember what it's called, but something about converting people's garages.
ADU.
Yeah, there you go. That's a big thing right now, right?
So that is additional. That acronym stands for what again? Agnes?
Auxiliary Developmental Unit.
So ADU is Auxiliary Development Unit.
Yes, but yes, may I also, since you were talking about myths, I'm sorry, Melody, but I want to take this chance. Since we're talking about myths, some people think that putting an ADU will give the value higher. Just remember, appraisers may not use that, the extra square footage in appraising the property.
But you know what? That has actually been a trend. So thank you for bringing that up, Stacy. In the insurance world, there's quite a few of my policyholders, especially in the downtime, they have used it to renovate and upgrade their properties. And I've seen a lot of that where they are wanting to increase or bump up their property value and their insurance to value of their property due to those addition. So very good point. So we talked about changes in laws. This is so this one is the usual that I hear. And you being realtors, I would imagine you'd be biased on one versus the other. But just for the sake of asking it, tell me your take on buying versus renting or leasing. Why buy? Why rent? Or why lease?
Do you want to take that, Stacy, or do you want me to go ahead?
Go ahead, you start.
Yes. So I speak about residential properties. Why buy versus rent? When you yourself, sometimes this is another myth. Tenants think that when they rent instead of buying, they don't pay maintenance or repairs. I just want to make sure that tenants out there know that their rent includes already the repairs and maintenance. The landlord has imputed that already in your rent. And then if you are the owner of your own property, you can do whatever you want. In other words, this is real property. This is your real estate investment. This is real. That's why they call it real estate. So it's an investment that you can touch. You can go in, you can live in it, you can see, you can smell the cooking in your kitchen. You can hear what's going on with the children. You can taste the cooking. In other words, all your sensibilities are heightened, and especially knowing that it is yours. When you rent, when you leave the property, you don't bring anything in terms of money. If all is good, when you own and when you leave the property, you sell it, chances are you may bring something to the next home, from home A to home B. So in other words, renting, you are paying someone else's mortgage. owning, you are paying your own mortgage. So, and also with owning, the interest on your mortgage is tax deductible. Again, I am not a tax agent. Please consult with your tax advisor.
Mhm.
And I would say on the commercial end, you have appreciation and depreciation. Those are two huge things.
Yeah.
Control of your own, a lot of tenants are always complaining the landlord didn't do this and the property manager didn't do this. So you're controlling your own destiny there. And that's the biggest reasons for buying, I think. And
So that's double dipping on two
Equity.
rewards there, right? So appreciate
Equity.
gaining equity, and at the same time the depreciation that you could use as a deduction on your taxes. So
Correct.
good point.
And
Now,
Melody,
yes,
piggybacking on the coronavirus, a lot of people now have pets. If you were renting, landlord may say no to pets. If you own your house, I'm gonna have 1, 2, 3, or 4 dogs.
So personally, I was looking at all those teacup puppies, and they are apparently on the rise in terms of people really wanting to own pets. So what used to be X amount is now Y amount. So as usual, the course of supply and demand with anything,
Correct.
right?
Correct.
I talked to somebody yesterday who's been trying to adopt a dog for 3 months, and they said they can't find one.
That's true. That's true.
There's multiple people fighting for pets too, just like they're fighting for houses, I guess, and buildings.
Actually, with real estate, we can go on with a lot of topics and a lot of angles in this crazy awesome industry. So let's end it with this. A lot of people are actually thinking or speculating, with the pandemic, they're thinking, okay, or with the looming depression, or with the global state of economy, that it's good to maybe wait and see how the real estate market could perhaps stumble. What is your take on that speculation, on that mass speculation?
I'll start. I once listened to this speaker who said that like every 10 years we kind of cycle up and down, and we haven't had that since like 2008. So we're definitely long overdue. And most people predicted it a couple years ago, but it didn't come. So maybe it won't come. Maybe we're not going to have that big dip. There hasn't been a lot of construction, at least in this market here. So there's not like a lot of new inventory. So I don't see a huge correction right now, but I think if you're not in a hold for the next 5 years, then I'd be at least 5 years, I'd be more concerned about it. But I don't see anything that says we're due for a correction. And so,
How about you, Agnes? What's your take on that?
For residential properties, actually in 2019, let me just give you a few statistics. 58.7% of all homes in the US had at least 60% of equity. So what that means is only 40% had a loan. And of this 58.7%, those with mortgage. And then in 2019, 42.1% of homes were owned free and clear, meaning they didn't have a mortgage. And what's good is that about $177,000 was the average equity of mortgage homes. That was in 2019. Now came 2020, which was the pandemic year.
Yeah.
There was a gain of 17,000 in home equity nationwide. The average equity now of mortgage homes rose from 177 to 194,000 because of the increase in prices. Okay, so 38.2% of homes are now free and clear, no mortgage, and that's an increase of 10.8% in equity totaling over $1 trillion. So in answer to your question, if prices will fall, based on this, prices may not fall. And a few other reasons are interest rates are historically low. We're between 2.65 to 3%. And as I said, there's a lot of homes which are free and clear. There's a lot of equity right now. So if you have equity on your home, which to the tune of average 194,000, you won't let it go. And if you won't let it go, prices won't fall.
Mhm. How about inventory? I'm curious. Are there a lot of stale inventory that's just out there that hasn't moved? How's your inventory, Stacy, of
It's going pretty
properties?
quickly. I don't think there's much, if stuff is overpriced, maybe, but generally speaking, it's moving quickly.
Mm-hmm.
So it's
Correct.
good. Properties are moving.
Yeah, you see a lot of comps every day.
Whoa.
Correct.
How
Mhm.
about you, Agnes? How
Um,
with the residential?
the in corollary to what Stacy said, yes, as long as property is priced well, because there's price sensitivity, and as I said earlier, everyone is on the internet. Everyone is smart now and intelligent. They know what the price of a property. So everyone is price sensitive. As long as it's priced well, you'll expect a shorter days on market. You'll expect a fast sale.
Thanks in part to Dr. Google and Dr. Wikipedia, right?
Correct.
So,
Mhm.
I have learned a lot in this episode, and
Mhm.
and I know you guys have a lot of things lined up for today. So I really appreciate your time and generosity in sharing your knowledge. Wishing you guys continued success.